Hey, Ryan, why don't you pull up Amazon's margins real quick?
Well, yeah, I'd have more of a grin on my face than Stephen Hawking on Epstein's Island.
I'm off as a smug cock when he said that.
Wow, fiscal philosophy, you're not very smart at all. You screw up, cash flow kings. Dissector, you are an idiot.
Hello, everybody. It is Saturday, and it's Saturday 8 p.m. Eastern. At Saturday 8 p.m. Eastern, you could be doing a wide range and variety of activities. Fiscal, what are some of these activities you could be doing at Saturday 8 p.m. Eastern?
Whew. I mean, you could be continuing to have a hangover from the holidays.
Yeah.
You could be waiting in line at the stores trying to return stuff that you were given that you didn't actually want. Bad time to do that right now, guys.
That is the worst. That's just bad.
It's terrible.
Yeah.
You could be getting stuck in the mud.
That's
could be slipping on ice.
It could have happened. You could be running routes in football games and slipping and hurting the bone in your ass.
Oof.
That's not
tailbone injury. Not pleasant.
Not pleasant at all. Something that also could be happening is you could be getting your car hit by a drunk driver and getting them arrested.
Wow.
If it's a little specific, it may have just happened to me. Let's just say, everybody, we're shorting Progressive after this because we're taking them to the bank.
Is that? Do you know that they had Progressive?
I'm not confirming or denying anything, Fiscal, but Fabio, I'd be worried.
Wonderful. So what happened?
We're going straight. We're on one of the main roads in my town, and there's this guy that pulled out in front of us earlier, and he was going probably 20 under, and he was halfway through the lane, so it was hard to get in front of him. Eventually, we got ahead of him. Then this guy tries getting in the left turning lane. He just hits us. So I follow this guy into a church parking lot, and you could obviously tell he's he's got to be slower, higher, drunk, or all three.
He was on his way to Bible study,
I don't think he was on his way to Bible study. The guy's just creepy in general. Eventually, the kick of it is he's getting ready to do a hit and run. We see him, he's looking around. He's looking behind him. Me and my girlfriend start recording him, and he decides to stay. There may or may not be a picture of him getting cuffed by the police that could be circulated. Members only potentially. I don't know.
We need to set that to Bad Boys by the Inner Circle.
Yeah, I was
and put that in the members only section.
Yeah. It was everybody, I recommend you get insurance because anything can happen. My words. No, what a horrible thing to be wishing Jackson to get bought out by P. Oh, that's horrible.
What a stupid idea. But you know what? I see what you say a lot. You have a lot of stupid ideas.
Shh. Yeah. Crazy time driving. Everybody be safe. People enjoy a drink or 2 or 4 during the holidays. Don't get hit by a drunk driver. And if you do, sue them to the tits. My words of encouragement. Fiscal, how much weight did you gain over the holidays?
I'll find out when I get home. I'm still in Illinois.
Yeah. The nice setup in the back. It looks like you're about to get an exorcism done. An old Christian home.
Because of all the old oak furniture.
Yeah. Okay, we do have a special guest in, and it's a 1-year anniversary. He's getting ready right now. I see him. He's all hyped up. It's a 1-year anniversary. We thought this would be a lot, I shouldn't say better, but a lot more obvious than it may look right now. It is the Uber 1-year update. We did a show 1 year ago with Aria where he basically pitched us Uber. Me nor Fiscal owned Uber at the time. The whole episode convinced us to buy Uber. Go watch it. Aria's come back now a year later to share the thesis with Uber, how it's changed, and 3 deeply discounted dividend stocks to buy now. Aria, welcome back.
Amazing. Dude, this is what, episode 7, 8, something like that, man.
It's something good, and I got something real special to celebrate.
Of course you did.
I know how much you love Tim Hortons.
Yeah, it's a ongoing joke for the listeners. I don't like Tim Hortons much, but anyways, yeah, thank you guys for having me back.
Yeah.
Of course.
Yeah, man, it's I mean, if we did this maybe a month ago, it would have Uber was what, like at $100 per share, so it would have looked a little bit better. But nonetheless, even today, I think at the time we did the video, it was $63 per share. So I mean, it's definitely outperformed since. And I think it's actually more undervalued than when we did the other episode.
That's the kicker of it. It's technically cheaper now.
The stock is up 25%, while free cash flows are up like 30. So it's like, you know what I mean? So it's it's done nicely since,
Yeah, obviously, and you can all check out those check out the graphs you need on the best investment research platform, Fiscal.ai, also formerly known as Finchat.io.
Link in bio, 2-week free trial, no card required.
Yeah, it's worth it. All the pros use it.
Also, the commission, pretty nice.
Oh yeah, we got to figure that out, Fiscal. We'll figure it out.
Oh yeah, we do.
Yeah.
Yeah, I saw the email thread of you guys. Yeah.
Uber is it looked very obvious. I feel like once it hit like, I don't know, 90, 100, it felt very obvious to everybody. And then suddenly for some reason the stock went down like 10%. And now it's Robotaxi.
I heard a rumor that it literally dropped the day somebody saw and posted on social media that they saw like a robo taxi going by without a attendant in the front seat, and that's one of the things that sent it spiraling a little bit.
So a very rational stock market, if you will.
Yeah.
Have you seen? I've been putting a couple tweets out recently, but just based off of the numbers that like Tesla released themselves. Okay, this is a bit funny as well. So Tesla, the robo taxis or whatever, which are supervised anyways, the
kings of the robo taxi.
Was that sorry?
The kings of robo taxi.
Oh, yes, exactly. The kings of robo taxi, even though they're the smallest. So they've driven 250,000 miles. Okay, 250,000 miles. Meanwhile, Waymo's done like 127 million. So what is that? Is that 1,000 times bigger? In terms of
no, it's like 400. It's like 400 times 500.
125. Oh yeah, you're right. Like 500 times something. Okay. Anyways, still like significantly bigger. So then you can take like, the number of crashes divided by the number of miles driven. Long story short, a average Tesla robotaxi is like 12 times more prone to crash than the average human driver. Just based off the numbers they themselves released. Okay.
But LiDAR sucks. Elon says it sucks on X.
Well, listen, if humans can see with their own eyes, then robots should also be able to, right? I mean,
yeah.
If eyeballs are good enough for Mother Nature, they're good enough for robo taxis.
Totally, dude. Totally. So anyways, that's just a disaster. But
I'm assuming you've seen the Joseph Carlson tweets defending Waymo at any chance?
Maybe like a couple of them.
There was a recent one where I think Waymo, what was it, Fiscal? He drove into like a marathon or something by accident.
Oh yeah. I think that was even where I live. I think that was wasn't it not the Phoenix Marathon?
You should have been on there doing some due diligence.
Well, sorry, it might have been in one of the other towns. It might have been in Mesa or Tempe or something. I don't remember, but yeah, I think that was actually near where I live. But yeah, I was not there. I don't like running. So
yeah, I'm pulling up the tweet right now. But Joseph Carlson has been like infamous he's done it on a few occasions now where it's like Waymo it'll stop somewhere in the middle of the road, or they killed the cat the one time they ran over the cat, and he just defends it to the day he dies. And I know you're such a big fan of Joseph Carlson, and
no, I'm completely fine with him. No, I really am. I've absolutely no problem with the
guy. Why do people keep tagging me whenever Waymo screws up? No part of my thesis is that Waymo will have 100% uptime or always operate correctly. This is like tagging when AWS went down because I'm invested in Amazon. Yeah. Funny moment.
Well, dude, I don't know. I think it just kind of like speaks to maybe if you get to a certain size, then people just like tag you and stuff like, yeah, exactly. Like when AWS goes down, okay, so what?
Yeah.
Like big deal.
Yeah, he's gonna personally call up Jassy and Bezos and tell them, like, hey.
But okay, so if you're the guy that's tagging him in the AWS tweet of it being down, what are you expecting? Like he chimes in as like, "Oh, this changes everything. I'm gonna sell out of
my
my
investment
Amazon."
sucks. Better sell Amazon now.
Yeah, that's it. That's straw that broke the camel's back. Like, okay, right. Anyways, more in terms of the FSD and stuff. I mean, it's just a complete joke. And then Elon's talking about in 3 weeks they're going to take the they're going to get rid of all of the supervisors inside of the car. Right? I'd like to see that happen. And this is on top of nonstop delays in terms of basically everything.
Yeah.
And we're going to be at Mars next week, and they're not going to use LiDAR on Mars. Let me tell you what.
Yeah.
We're
going to put data centers in Mars.
Yeah.
Anyways.
What do we think over the last year with Uber? Do we think anything has changed to the bull or bear thesis?
I think last year we were kind of speculating what the sort of AV strategy would be for Uber. I mean, we've had 4 conference calls since, God knows how many sort of like in between like little events they've had as well. So there's been a lot of materials released by the company since. It's become evidently clear that they see a future where AV market is very fragmented, and fragmented, by the way, not just with the companies actually doing the autonomous vehicle rides, but down to like fleet managers and the people that pay for the cars, right? So these are all different parties. Yes, Waymo currently owns the technology and the cars and is managing the fleets, but that's like Google backed, right? If you have you guys heard of Nebius, this company Nebius?
Yeah,
I have, a little bit.
Yeah, so they own, I think, like an 80% stake, or they might fully own, actually, if I remember correctly, in Avride, right? So, and that's a company that's going to be launching, I think, within the US in 2026, if I remember correctly, right? So, with that company, they're just doing the tech. So they need an OEM to provide the cars, but then somebody needs to buy those cars and like own the actual fleet, and then somebody needs to manage the fleet and cleaning and maintenance and repairs and charging and all that stuff, right? So lots of different parties, very fragmented. It's become abundantly clear that there's going to be multiple winners in AVs, and Uber will be the demand aggregator for them all.
Do you want to explain to the viewership who may not be familiar and they hear the sentiment that Waymo is going to take Uber out of business, how the relationship works?
Yeah, so okay, we could tackle this in a lot of different ways, but the main issue that Waymo in particular will have is that if you, let's just take the city of Toronto, for example, right? And there's a great chart on this. I'll try my best to be able to pull this up while I'm talking, but basically the chart shows that there's a big variance in terms of demand throughout the day. So during peak hours of, call it 9 a.m. when people are trying to get to work, right? There will be a big, okay. You know what? If one of you guys want to talk for a second while I pull this chart up, because I think it's...
Bring up the comment.
Yeah, Mohammed, channel member, has a comment. He's in a Waymo right now, which he got through Uber. Of the last 11 Ubers that he ordered, 8 were Waymo, very successful in his city. So there you go. Mohammed is also a well-known Uber bull. And
yeah, so they are partnered up, right?
Yes. So what?
They are partnered up, which is nice. So here we go. I'm just gonna share my screen. Can you guys see this?
Yeah.
Right. Okay. Good to go. So this is in Q4 of last year. Actually, this is a little bit old, but I think the data still stands. So as you can see, this is I think top U.S. city. So they don't say, but this might be like Chicago and New York and Miami, whatever the case is. And so as you can see, like these are the hours here and then the days of the week. And so the baseline is like 1 times demand. So again, just to keep the number simple, let's just say there's 1,000 rides per hour being requested in this city, right? Miscellaneous city. And then you can see that, a little bit after midnight, I think right here, this may be 1 a.m., there's 0.1 times that demand. So if the baseline is 1,000 rides per hour being requested, this is 100 rides per hour being requested. And then you can see on Thursday at 5 p.m., roughly, there is 1,700 rides. Over here, there's 1,900. So the point is that the demand is not stable. And this is completely true, right? If you guys have ever went to like a concert or something like that, and you try to get a Uber Home, you see like the price is like twice what it would normally be. And you're like, oh, what is this? Because there's surge pricing, there's more demand and less drivers, right? So the issue with that is these massive fluctuations in demand. And it's not just because of the hours of the day, that's part of it. But like if there's a road closure, if there's a concert, if there's some sort of sporting event downtown, right? Even down to like lunch, if there's a promotion at like a famous restaurant in some area of the city, that's going to impact Uber Eats, right? So big variance in demand. And so the issue that a Waymo as a fully autonomous fleet has is how many cars are you going to put in the city? Are you going to put 100? Well, no, because then when the demand goes to 2,000, you're way under monetized. Are you going to put 1,000? Well, no, again, at 2,000, you're under monetized. And when it goes to only 100, you're over monetized, right? So it's this balancing act of, do you put a lot of cars, a little cars? Like how many cars are you going to put in the city, right? So if you partner with Uber, it's kind of the hybrid model where it's, you have this baseline of sort of, I don't know, 300 cars, whatever the case is. And then Uber can kind of supplement with human drivers to match the demand throughout the entire city.
Yeah, that makes sense.
Yeah, sorry, I've been talking a lot, but to answer your question, that's kind of like the big issue that Waymo has independent of, say, an Uber.
Yeah. What do we, I know we're all big fans of the Uber CEO, Dara.
Yep.
Do we have an engagement yet on Twitter with him?
No, but the Uber investor relations guy actually liked my tweet like a couple of days ago.
Oh, I think I saw that. There we go.
Very nice.
You saw that?
I saw Discord, yeah.
Oh, yeah. Because I
so.
screenshot it and put it into, yeah, okay.
Yeah.
But yeah, that's it. Not to my knowledge in terms of, I did send them an email asking to interview Dara, which, by the way, they should give me an interview, dude. Like I bought
propaganda,
the
positive propaganda. Entitled to it.
I'm Persian. I bought before Bill Ackman. Like, come on, dude.
You've done a
Bill
lot of heavy
Ackman did
lifting for
copy
them.
your.
Yeah.
I can't believe Bill Ackman retweeted CapEx and Chill's
and Manu.
post.
Dude,
And
two
who?
people from my Discord, Manu and Wes.
Oh, yeah.
Two people from my Discord. They've been quote tweeted by Bill Ackman.
That's cool, but the Google CEO replied to Dividend Dude's response. I just want to throw that out there.
Yeah. Well, I've had,
hey, some people get shout outs from Jeremy on this channel.
Oh yeah, that too. I forgot.
Why don't you guys like Jeremy, by the way? I've been meaning to ask, but just because of the vegan food thing.
Oh,
Tattooed chef.
Tattooed chef. I don't think he's the worst.
His courses are grifty as shit. That just to
courses.
be blunt with it, like I don't think he has any business selling people a course on how to read an income statement, for example.
Yeah, you really think that?
No, yeah, I really think that. I think that that's a terrible, like, what makes him so qualified that you should pay hundreds of dollars for a course for him specifically, like his background as a gas station attendant, or like what is it that makes him qualified to be the financial education channel that sells courses to people on finance? His amazing investment in Tattooed Chef, where he lost $3 million, does that make him qualified?
Whoa, I don't know. Was it really $3 million?
Yes, there's the famous clip that Strongman constantly uses. I'm not down 1 million, 2 million, $3 million in the chef. So yeah, like I just don't think that his like whatever, like I know I use a particular method of investing, but I think my method's better than his personally.
Ooh. We've only had TSSI drop. TSSI is our TTCF.
Right. Well, Pfizer is my tattoo chef. Listen, we all have that negative 70% loser. By the way, I'm still holding, so I mean, we'll see what happens. But.
Pfizer, yeah, that's why not at that point.
So hey, I bought that once upon a time as well, but it didn't go to zero, and I did get out eventually. So
oh God, Gil's here.
Walgreens.
There you go. Oh, shots fired. Shots fired.
I like whoever has the biggest portfolio is the smartest. Is that gonna? There's a logical fallacy there.
We're gonna start the grift next year, Fiscal.
No, I always like the guy. Well, I say I was kind of neutral on him always. I didn't really watch much of his content, like particularly when I was very early on. Obviously, I did, but I think he really showed his character when he got on a podcast for an hour with this random guy about Fubo stock. Do you guys know this? The guy had like 600 subs, and he gave an hour of his time. I don't know. I thought it really speaks to his character there. Of you don't have to do that, dude.
Yeah.
I mean, as we could see, like you have this big house, multimillionaire as per your portfolio, whatever. I don't know.
Let's hope he didn't charge him.
So Gil, over what period of time did he outperform me? Like, he definitely didn't outperform me on his tattooed chef investment. Like, he doesn't share his full P&L of all of his portfolios, so we can't know who he outperforms or doesn't. Gil, okay, Gil.
We're still waiting for Gil to come on. Back to Uber though. What do we think? It's obviously, I don't think anybody would have predicted the year that kind of happened with Uber, with obviously like April happening and Liberation Day, that whole sell off, and kind of how the whole year has gone. Do you have any predictions for the fundamentals this year with Uber, like free cash flows, anything else?
So management has kind of outlined to us that they expect to keep free cash flow margins pretty stable here. And it's not from a point of like, we can't raise them further. It's more from a point of they see so many reinvestment opportunities present with the business that, for example, in AV and whatnot, that they want to kind of, keep free cash flow margins stable and kind of reinvest into these other opportunities. And it's not just AVs. So like grocery and retail is a really, really fast growing business for them. And so obviously, running that at like pretty low margins to get adoption. I mean, they ran this playbook over and over and over again of, for example, Uber Eats comes out and like you discount very heavily up front to get people to try it, or like the reserve product, or, now it's grocery and retail. They have all these different things, right? So that's kind of what they're doing. The Uber One membership, again, giving very, very generous offers for you to try those out. There's also, I guess, the advertising business. That's B2B, so I don't really see it. But again, I would assume there's incentives to get the restaurants to start advertising on Uber as opposed to a DoorDash, say, right? So they're keeping that free cash flow margin pretty stable. If I were to guess, I would say revenues grows at about 18%. Free cash flow per share, maybe a little bit faster, called 20-21%, thereabouts. That's kind of how I would estimate fundamentally where the business goes from here, at least for the future year.
Regarding measuring them based on free cash flow, what about the insurance segment of Uber?
Yeah,
I've heard some people saying that maybe free cash flow isn't the ideal measuring stick because of that.
Yeah, it probably isn't. So I mean, that is cash that they own, that is part of their business, that is on their balance sheet. They're collecting interest from it, but they've kind of like sectioned it off. It's not operating cash. It's cash on the balance sheet that they're collecting interest off of it. Like it's not used for the day-to-day operations. We can exclude that to do valuation. It would obviously make the picture look a lot more gloomy, not as cheap and whatnot. I think we're getting to a point with the net margins of the business where, at least on a forward basis, you could actually start looking at it on a PE. So on a PE or EBITDA EBIT, starting this year, starting next year, I think, using forward PE, for example, is kind of like an easier, cleaner way to look at the valuation. That's probably how I'm going to be valuing it. And then if I can add another thing, the insurance reserves as a percentage of free cash flow is continuously going down. So I can show you that. Ryan, I'm just going to hijack this.
I got you.
Screen share from you. Can you see this?
Yes.
Hello?
Yes. Uh-oh.
Am I on mute? Can you guys hear me?
Yeah, we can hear you.
Oh, this is weird. I can't hear you guys.
The Oracle's attacking.
All right. Anyways, but yeah, this is kind of what it looks like. And, as you can see, it's kind of trickling down.
Nice.
As a percentage. Yep.
Once again, everybody, Finchat or Fiscal.ai, the best investment research tracker you could possibly get. Link in description. When I was referring to the valuation technically being cheaper than last episode, which was December 2024, valuation actually April. That's probably when it was cheapest. December 24. It was, hold up.
Maybe just adjust the slider there so you could see it a little bit easier. Move it, maybe one more even, but that's fine.
There we go. Liberation Day sell-off at like 36.3. Now it's at around 38. And then last December, it was at 46.8. It's at 37 now. So
But again, like these are what, like 9% operating margins. Like their free cash flow margins are 18%. So like it's still got a lot of room for margin expansion over the next, call it, handful of quarters.
Yeah. I would say, do you think it's the most attractive opportunity in your portfolio right now?
I'd probably say it's either this or Adobe. I mean,
Oh yeah.
just pure growth perspective, Uber clears Adobe. And the long-term optionality. I mean, I didn't even talk to you guys about this, but other than like grocery and retail and, where the advertising business can go and where the Uber One membership goes and all that great stuff, like they're starting to get into just so many random things. They're starting to get into like Airbnb experiences. Have you seen this? It's like,
No, I haven't.
dude, you can book a ski resort off of Uber.
That doesn't shock me at all.
There's 40 of them, right? So it's like, and this is all over, I think, like Midwest America, I think.
Yeah.
And so, again, like you can book a ski resort. So like, where does that business go? Another business they're starting to get into, car rentals. How absolutely genius is that? That completely makes sense. And I think car rentals is like $100-ish billion industry globally.
Are they doing that
Granted.
to Mog Toro?
Sorry?
Are they doing that to compete with Toro?
Maybe. Yeah. I mean, I feel like they just see it as like yet
Because
another
that's an app that like tries to be like the Airbnb of car rentals or the Uber of car rentals or whatever.
But
so.
yeah. And Turo is a very terrible experience searching for cars on it, by the way. I don't know if you guys have tried that before.
No, but I have heard it sucks. And I've heard it sucks for the people that offer their cars on there too.
There is no search bar on the actual Turo website or the app. Like you have to Google, I don't know, like Mercedes, whatever.
We're going to do a little due diligence here. Just going on Uber.com. Once again, I don't think a ton of people use the actual website. I could be wrong. I think most people tend to use app. You can get ride, you can reserve rental cars, grocery, food, courier, and then going down, you can plan your journey if you want to like go to the 9/11 Memorial Museum. Let's say we want to do that. You get a ride, you can rent, and get your eats. So like they're getting into a lot of stuff.
Yeah, it reminds me a little bit of like an Expedia or something. With how you can do like the experiences and like book different things. Yeah.
Well, Fiscal, you'd be surprised to know Dara was the former CEO of Expedia, actually.
Okay. Well, this is suddenly starting to make sense. Yeah, I was. That's lore. So that's some lore I had no idea about.
He did absolutely shaft the business. I mean, I'll be completely honest with you. Like the reason Booking.com exists and like has such a dominant position today is like Expedia kind of dropped the ball. He's openly talked about it, by the way. It's because it's very simple. The Expedia take rate was like 25-ish%. So when you enter into Europe, which is primarily Booking's market, at a 25% take rate, Booking is at 15. Why would any hotel list on you?
Yeah.
Right? Like, so yeah, they kind of dropped the ball on that. And naturally Expedia being a more North American business with chain hotels as opposed to sort of like boutique, like mom and pop hotels, it doesn't help out. But yeah, going back to it, dude, like rental cars again, like that can maybe 5, 7, 10 years down the line, Uber becomes the go-to place for rental cars, right? Like that or experiences, right? It doesn't have to stop at ski resorts and whatever. You could literally book like Airbnb style experiences off the Uber app. Like that's so cool.
Yeah, I'm just looking up the rental car, the market share right now in like North America. Enterprise, Hertz, Avis, which is about 70%. So I think Uber's like network is so big where it wouldn't take a whole lot for them to make a decent dent there. There's also was there not a lawsuit in like Romania or somewhere over in Europe with Uber that caused it to go down like 4% a few weeks ago or months?
Couldn't tell you.
Okay.
My general thought on regulation in general is it's like whatever regulation gets added to Uber, it works in their favor in the long term because it makes the barrier to entry that much higher. So if, for example, in New York, there's a minimum required hourly driver earnings, right? You have to like kind of adjust it and like pay them out if they don't meet that minimum requirement. That works in their favor because it makes it harder if, say, another competitor wants to try to get into New York.
Yeah. Fun question. kind of related to Uber, but it's more of a personal finance question for the both of you. Do you think it's worth it to be an Uber driver or Uber Eats?
Fiscal, you wanna...
It very much depends on your situation.
Mm.
If you can make more money doing something else, then no.
Oh.
Like, but if that's the best option you have, then yes. Like,
yeah, fair. I mean, we should really be comparing it to sort of like, you know, like Walmart level jobs, or like Amazon, Amazon,
or heck, pizza delivery guy for your local pizza place. You know,
pizza delivery guy for your local pizza place. Yeah,
yeah.
So stuff like that, and I think there's third-party data suggesting that I might butcher these numbers, but it's like the average hourly earnings in the U.S. is, I think, like $22 per hour, right? Which is pretty healthy. Again, that's the average. But of course, you know, there's car costs and insurance and stuff like that. But nonetheless, I feel like the fact that it's such a flexible job also adds to the value, right? Like you can work for 2-3 hours and then you can hop off whenever you want, right? So we got to factor that in. Again, yeah, I think if like, you know, between your other options, it doesn't work for you. In many cases, maybe you need some sort of a certification to be able to work at, say, even like a restaurant job, right? So there's nuance to it, but yeah, there's a reason why there's 9 million people driving for Uber. I think it's worthwhile.
Okay, there is an Uber One subscription lawsuit with the FTC in the United States.
Stupid.
There's a bunch of ones. The Women Plus Connect feature. It's like male driver discrimination laws, disability discrimination. I'm sure this California waits
Uber One. Could we do the Uber One really quick?
Yeah.
That is so. I mean, Amazon had something similar a couple of years ago where it's, oh, this is really difficult to. They're trapping users. They're getting you to sign up with a free trial and then making it difficult for you to cancel. You can Google right now, and I encourage you, Google right now, cancel Uber One, and find what is the first link. It's a link to cancel your Uber One membership, right? And then as long as you just
that's too difficult for the average consumer, sir. They can't figure it out.
The first link, I think, count the number of clicks. There's maybe 3. There's maybe 3 clicks until you can cancel it. Is that really too difficult?
I'm doing it right now.
Well, don't accidentally really do it though.
Don't worry. I'm not on Uber One yet. Okay, one. Okay. Oh, it's like 3 clicks.
Something like that, right?
Yeah, not bad.
Yeah. So, or if you search for it on a computer, it shows you the instructions on where to go.
I wonder if Lisa Khan brought this up. Oh, they did. It was a. Wait, no. This is separate. Okay. This was a year ago.
Is she still in?
No, I think she's gone.
Oh yeah. Okay.
I thought once Trump. Yeah, it's Andrew Ferguson. Yeah.
Who is that guy?
It's a Trump appointee, so we can get away with anything now.
Anyways, unless you guys have more Uber questions or whatever, I'd be happy to turn the floor on you guys. What have you been buying recently?
God, Fiscal, what have we been buying?
Deeply discounted Dave stock, EBITDA.
And Dave stock, yeah. I mean,
Dave gave us a little Christmas present. That was nice.
Yeah. Dave has had a little Santa Claus rally. That the early wage access, you know what I mean?
I'll double check right now what I've been buying.
I honestly haven't been pressing the buy button too much recently, to be very honest. I've been more
took the love out of the game for him.
Yeah, no. But I will say, like, I've been just kind of thinking about what do I have that I'd like to add for 2026. And, you know, I look and I see like, hey, Uber is cheap, and it is one where I think maybe I could add a little bit here because it's $80. It's not $100, right? So, and I do think it deserves to be over $100. A favorite of ours, High Tide, might be worth adding. Some Grab, Uber's Asian cousin. I might could while it's in the low 5s, or if it dips below 5 again.
Fiscal, are we averaging down on TSSI or no? Or are you just letting the pain?
I might consider it a little bit, but I mean, my cost basis isn't ridiculously high. It's like, I think it's like $10 or something across accounts, something like that. So I'm down a little bit, but it's not kicking me in the nads too bad. Evolution Gaming's cheap.
Oh God.
It's always been cheap.
When has it not been cheap is the better question.
Well, it's especially cheap. It's even so. My cost
2021.
basis on that is about 75 a share, and it's below my. It most of the year it was above my basis actually.
Oh my God.
Um,
Dude, I got so lucky accidentally selling that business. Well, not accidentally, but I moved my TFSA, like basically like kind of like the Roth IRA that you guys have. So I moved it,
Yeah.
and then you can't move an ADR, so it like forced the sale at like a 2% loss, right? Meaningless. And then I was just thinking like, okay, whatever, like I'll just not reinvest this back in. I could have, but I didn't. And yeah, that was at 111 per share. So I mean,
111 Canadian.
2% law. Oh,
USD.
Oh,
Evolution. I don't think Evolution was ever over 100.
it was a while
Yeah, it
back. They were
Oh, it was a long time ago?
Yeah,
Almost 2 years ago, dude.
Yeah.
Oh, okay. Then maybe it was before it was on my radar. Okay.
Yeah.
I just don't remember it ever being that high in the time.
I think I told you guys about Evolution, no?
I
was
want to
on all the
say
time.
you did. Seymour is the first one to get us to like look into it, but you did mention it.
Yeah, it was
Oh,
on
and
all the pod.
Amazon's another one.
Yeah.
I would probably consider getting into more Amazon for 2026.
Yeah, I could see it working out. Amazon's very disrespected, dude.
Yeah, they're overhated right now compared to the other
Lag
Mag 7s. Yeah,
Lag 7.
the lags, right? Yeah, especially Amazon is especially so. I think I was reading recently. It's only up about 5% on the year. Is that
Something like that.
what I'm?
Yeah.
Yeah.
Amazon. I've been buying Amazon below 215. A ton of Uber, and a little TSSI. I don't know what to do with it. Fiscal. This is just like sad at this point. Everything else is going up, but it can go up it can go up as fast as it's gone down. So fun.
Was TSSI a big position for you guys?
Him,
Pretty
no.
big for me.
Him,
Pretty big for me. But I did already have a position in it that I bought pretty close to the levels it's at now, and then sold some at over 30, and then bought back. So like overall, I think on the whole, it'll end up being kind of a wash with being down now when I was up and realized some gains earlier on it. So yeah, but it is sad to see that what I thought was gonna continue to catch enthusiasm, it did not. But sometimes that just happens.
Dude, I can't believe how much Evolution's fallen, man. Oh my God.
Are
Is
we
it
talking
just
from like
growth?
2021 highs or just like recently?
Just on all time frames, man.
Oh, yeah, that's thankfully. Oh, yeah, I'm looking at this run from 2021.
Like anything short of the 5-day chart is just brutally down. Brutally down, man. Nope.
Yeah, I think we're like what 10% fiscal around there.
Yeah, I think I'm down roughly 10% on it.
No, that's not too bad.
But yeah,
Next
well,
quarter will
and
be
actually
interesting.
the dividend, when the dividend comes this spring, if it doesn't
money.
really move from here, that'll more, because I collected one dividend earlier and I'm not dripping it, so the dividend will have more or less offset.
So something interesting with Evolution is that they recently completed the buyback program from last year.
Yeah.
So I'm thinking
They have a buyback program?
Yeah, they had one.
Yeah, they have an aggressive buyback program. It's limited because of the rules in Sweden. They can't do more than 10% of the daily volume in buybacks. So that limit, even though they have plenty of cash and they could theoretically do a very aggressive buyback, they do it as aggressively as they're able to.
Yeah. So I mean, I'm looking at the shareholder yield here, and it's just shy of 10%. So it's 5% dividend yield, 5% buyback yield. So
yeah.
Even if like
so I would think limited downside from my cost basis probably, and really a limited downside from here, assuming you don't think the business is gonna deteriorate super rapidly.
Yeah, what's the exact issue? Like, is it just revenue growth?
There are some concerns with them moving away from unregulated markets, and there's some concerns in Asia.
Yeah.
There've been some issues with people like pirating their stuff, and
They buy like one of the
like
game,
that.
or they buy like part of the game. And then like they steal a majority of it. Fabio gave me some statistic.
Hmm.
They're buying it, but just they're losing a lot on that.
Yeah, I mean, revenues are declining for the company now.
Yeah,
Last quarter
because
revenues declined 2%. Wow.
yeah, they're moving from the unregulated markets, but right now it's basically priced in where like you would be getting a really good return even if they have no growth at all. Even
Asia
like a little
is
negative.
primary issue, the
Yeah.
unregulated markets that they've exited
Gotcha.
there. Yeah.
Do we have segment data on how much comes from Asia? Let me take a look at this. I think. Whoa! Why do they break it down into Sweden, Malta, Australia, Latvia, Georgia, North America? What?
What are we looking at?
That's
The,
just
the
a
breakdown
really...
in their revenues,
Oh,
probably.
okay. All right. I
Wow.
found it. Yeah. So about 800 out of 2 billion. That's 40%. Yeah. So 40% of revenues comes from Asia. So actually, you know what? I'll share my screen so you guys can see. Seen this?
Yes.
So let me toggle on percentage change as well. Oops. So here, down here. So Europe, 750 million or thereabouts, which is declining now. Is this on quarterly? Oh, here we go. Oh, wow. Yeah, look at that, right? So Europe declining 7%, Asia declining 6%. Yeah, that's pretty rough.
At least North America's good.
And then I can make this other chart as well for you guys.
So Fiscal, I'll ask you the question while he's pulling this up. If Evolution gets back to like 90 or 100, are you selling?
90? No, it would be worth it. 100, even 100, I don't know that would be worth it. I guess it depends how many shares they've retired and what like the actual valuation is at that point as well.
Okay, I don't know what I did wrong here, but
oh man, the haters are out in full force today.
I know.
Yeah, this chat is fascinating to say at least. But yeah, anyways, you guys could kind of see this, right? So it's.
But at least we're relevant enough to have haters, I guess.
That's true.
Dude, I've been having to kind of like pull back in terms of reading on reading like Twitter replies and YouTube comments and stuff like that. Yeah. It's just like I don't know.
What's like the worst interaction? I think we've asked every guest we've had on what's like the worst at least that does YouTube or Twitter. What's like the worst interaction?
Or the biggest hate comment or the most
unhinged. Yeah, like when I was when UNH was falling and I was posting like negative stuff, just basically saying like, hey, like this like, don't just blindly buy the stock. Like this is really uncertain stuff. And you've seen it be impacted in terms of the fundamentals, right? So I mean, yeah, the stock is up a little bit, but like I think they're guiding for like a 30% decline in earnings. Something stupid.
Yeah.
I might be off on that, but I mean, here, we'll take a quick look. But,
I know some people that were buying UNH at 530.
So anyways, but like if you look from like the peak of net income until now, obviously, right? Like this is a multi-year turnaround, if that. So it's not like the fundamentals are not pretty. So I was just kind of airing some caution. And not only I think they mass reported my Twitter account, so I was banned off Twitter for like 2 days. And what's unfortunate with that is you lose all of your drafted tweets. So
I remember that. Yeah,
it's all gone, dude. Like I don't even know what I had in there, but it would have been nice to keep them around. So that happened, and then I also got death threats over it. So somebody just literally like, yeah, I can't even remember exactly. I got called the N-word for some reason. So. Like fun.
Wrong pejorative, guys. Wrong pejorative.
Yeah.
But yeah, UNH is a funny one. I got
a fun crowd, man. They're a fun crowd.
Pretty close to the bottom. Like as soon as I started buying it, like a couple days later, the Buffett bought it thing came out, and it was like I wanted it to stay cheap longer. But yeah, I don't think it's going to immediately go back to $600 like everybody else thinks it is. I think it's going to take a while, but I do think 2026 is going to be a better year for them than 2025 was, and everything. It's just people want that like instant gratification, and you're not. I think it's the wrong stock to buy if you want instant gratification.
Ryan, can you pull up Dan's little comment here about the clack one? Aria, you love moats and never bought clack.
Yeah.
I actually did a video on clack. Clack, it's just KLA. I did a video on them, I think maybe a year and a half ago or something. I do really like the business. I think it has a pretty solid moat. They have a leading market share in. Oh, this is so long ago. I believe it's etching. I think that's the process, right? Dan, correct me if I'm wrong. But no, I think it has a phenomenal moat. It's just I already own ASML, which is like, yes, it's not. I think they compete on like one very specific product, so it's not a head-to-head competitor. But yeah, like that kind of serves. Like I run a very concentrated portfolio, and I already have ASML, which in my opinion probably has a wider moat because they have a 90% market share broadly, and then they're a monopoly in terms of EUV. So yeah, just because I already owned ASML, I thought it would be redundant to have another semiconductor play that trades the exact same way, is kind of in the same basket of stocks. It's kind of like Visa, MasterCard, right? Like why would you have both? Yeah. Even though a lot of people kind of take the basket approach. I don't know, just very similar businesses.
Do you view Uber and Grab as kind of the same? Like that?
Well, no, because they operate in different geographies, right?
Yeah.
So there's that. And then I think Grab is Fiscal. You're probably more experienced on this, but it's more than just eats and rides. There's other stuff to it as well. Yeah. So
there's a fintech component, and they actually have a banking charter in Singapore. Yeah.
There you go. Right. So I mean, that's a totally different geography, and they are straight up fintech. So
yeah, Grab at 515 is really interesting. That's Fiscal. You might have to jump the wagon on that. We haven't had enough Amit posts recently with it too, so like the sentiment is not.
The pitch writes itself too. Like if you like Uber's business model, and you also like SoFi's business model, and you're also bullish on Southeast Asia, then Grab is your stock.
Yeah.
It's that simple.
And the fundamentals are just up and to the right.
Correct.
All right, we're gonna do a fun little exercise on. To let Aria go here, we're going to do a fun little exercise. Aria, I'm going to list off the company. I want you to give one word to describe them.
Oh, God. How many are we doing?
Google.
Can I do 2 words for this one?
Sure.
Slightly expensive.
Amazon.
Underrated.
TSM.
Powerhouse.
Dave.
EBITDA.
I had a feeling he was going to say that.
Is that one word?
UNH.
Maybe it'd be better for the audience if we kind of explain each one of these a little bit. UNH fraud. I mean, dude, I wouldn't be surprised if with all the different catalysts and stuff like they had, that it comes out in a couple quarters. That's what's happening with the business, right?
Yeah. Let's go back to Dave. EV to EBITDA. What did you mean by that exactly? A lot of people might be confused.
I think it's the best ratio to analyze Dave stock, right? I mean, the net income fluctuates all the time, and of course, for a company a financial company, of course, enterprise value is a very.
It's a witty move.
Sorry.
That's a witty move. That's why some people go to finance school and learn these things.
I mean,
Texas Roadhouse, TXRH.
Ooh. Maybe like unique or intriguing. Because it kind of defies gravity as a restaurant to have 15% revenue growth for nonstop years and years on end.
Eat there and you'll understand.
Sorry?
I said eat there and you'll understand.
It's good, right?
I enjoy it. I mean, I am a member of the Clean Plate Club every time I go there. Phenomenal. And in addition, I smash like 3 baskets of their rolls and
the breads,
butter.
right? And so is it true you can like go pick your steak before it's prepared, right? Like they have like a
I've heard I think that's an old thing, like from back in the day when they did the peanuts and stuff too. But they don't I don't think they do that anymore because that's not been the case when I've gone recently.
Yeah, we have in Canada we have the keg, which is like kind of like a steakhouse. I think it's a little bit more like bougie than maybe bougie is not the right word, but it's a little bit more higher end, I guess, than your guys' Texas Roadhouse. Like it's a nicer kind of like
Maybe more like a
atmosphere.
Ruth's Chris or something.
I wouldn't know, but yeah, that's kind of like the go-to like steakhouse kind of chain in Canada, and that place is packed, dude. You go on a Friday, even with a reservation, it's like at least the one near me is like 40 minutes to get in with a reservation.
Next company, Oscar.
Oh no, I don't know much about that one. Again, like maybe interesting. Like I've seen some of the KPI charts on it. Like their member growth is just like it looks like software.
Yeah.
That it looks like an interesting business.
Affirm.
Again, I don't want to keep saying interesting, but yeah, also Affirm. Like I think it could be an interesting business. Like it might work, dude. They're kind of cleaning up the operating losses and whatnot.
How do you feel about the BNPL space in general? Interesting, just overall as a basket.
I mean, you're seeing sort of like adoption, like wider adoption. Even like my dad was talking to me about it. Usually when my dad brings up like a kind of like newer age product like that, I feel like it's worthy of me kind of looking into it. But yeah, I think it has its place.
Yeah.
Sorry?
Means like the word has actually gotten out.
Yeah. I think longer term it can definitely have its place. All of them are, to my understanding, at least Affirm is starting to kind of get cleaner and profitable and whatnot. So I think they can be promising businesses, and Affirm is, to my understanding, the leader. So I'm sure there's scale advantages with that as well. So yeah, it can be interesting. They're growing really fast. I think it's 40% revenue growth.
Last one, Microsoft.
Compounder. Let me just... right.
There we go.
Double compounder with cheese.
I'm happy to do a couple more. I mean,
I'll do a few more. We'll do a few more.
Let's do a couple more.
Equifax.
I'm doing a sentence for it. Better than FICO, apparently.
I would have said leaky.
Leaky
because they like to leak everybody's data.
Oh, yeah.
Or was that Experian? I can't remember.
No, for sure it was Equifax. I think it's 2019. I want to say 2017, maybe.
Yeah,
something like that.
Booking Holdings.
Ooh, I would also say underrated. I mean, dude, like I also was kind of like a hater, not hater per se, but like I've tweeted this before where I was like, is this just a network effect? Like that's it? This is all the hype with the business? Yeah, it's just a network effect, and it's an insane network effect. I mean, the supply base of that business alone is second to none.
Lyft.
Weak.
Tesla.
Distressed. Have you seen the operating profits of that business? It's down 70% from the all-time high.
It's not what I would have thought looking at the stock price over the last 5 years.
Right?
Yeah. Tesla, it's literally just it's pump and hype and the cult. That's the only thing keeping it afloat.
I think somebody in the chat asks about Roblox.
Mohammed's a big Roblox guy. Yeah, Roblox.
Promising. Again, look at the fundamentals. Oh, okay. So they've done an insane amount of SBC for like the longest time, but they're starting to clean up their act. Yeah. I like investing in companies during that period, by the way, when the direction of the SBC starts to kind of decline. I think it's promising. I think, their games are very engaging. Mom, you're probably more in tune with the KPIs and the engagement, but I've heard positive things about the business.
Yeah. Reddit.
Wow. Explosive, dude. Have you seen like the fundamentals? The revenue, 70% revenue growth? And
it's surprising. It's much better than I think that they're gonna have like a discount that the tobacco companies trade at just because it's Reddit and the stigma around it. But it's very interesting like the fundamentals are much better than you would have thought, I think.
Insane. And then there's an argument to be made that extremely long term looking out. So part of the reason Snap and Pinterest and stuff like that have always been, valued very lowly, I guess, is even though they have a lot of users, they can't monetize them as well as a Meta, right? There's an argument to be made that Reddit advertising is actually way more targeted than Meta, because it's like you self-select. You go into the community.
Your subreddit, right?
You go into your specific subreddit, right?
Yeah. Right.
Whereas Meta tries
if you're
to
in the camping subreddit and we advertise tents there, you'll
right?
probably do pretty well.
Right. So exactly. So there's an argument to be made where Meta today makes about $50 per user across the year. Reddit's only doing 15.
Mm-hmm.
So longer term, could that possibly be more?
Yeah, that is an interesting point.
And last company, Adobe.
Deeply discounted.
Here we go. Aria, it was a pleasure once again coming on. Let the viewership know where they can find you, your Finchat links, exact URL, give everything.
Yeah, of course.
Your
just
LinkedIn,
my name.
your LinkedIn. Don't forget the LinkedIn.
The LinkedIn, of course. Yeah. I think the name is on screen, but it's a little bit blocked. But yeah, it's just art. Oh.
I got you.
Oh, beauty. Yeah. So it's just Aria Radnia. Again, if you're interested, I did a Adobe deep dive that was pretty well resonated with. So there's that on the channel if you want to go check that out. A bunch of Uber content and whatnot. But yeah, thank you guys. I had a lot of fun on this one.
Always a pleasure. We will see you back in 1 year when Uber goes to 150 and then tanks at the end of the year.
Maybe we group them together, the Uber and Adobe episodes.
Yeah, we'll do it.
Yes,
we'll
do it. A double header, just like at the drive-in movie theater.
All right, we will see you. What a fun time. All right. We will spend 5 minutes answering any questions or comments or concerns.
So did you ban Gil?
I suspended him. He got a timeout for me.
Oh. He was being
naughty, and there's some crypto scams with him that we can't have in this comment section. Welcome in everybody that came in later. Charalampus, Yankadangus, are you cousins of Giannis? Welcome in. Seymour's here. Animal Crackers, everybody else is here.
Peace, love, Animal Crackers makes a good point.
Gil, yeah, that's a really good point. Retire on dividends, peace, love, and Animal Crackers. You have permission to go after Alan Carlson. I don't like Alan. Alan's a low life. He's
a grade A hater.
Yeah, I would short progressive. Everybody, I'm just saying.
That's a joke for the record.
That's a joke. Me nor the hedge fund supports that. Ooh, I would be delighted if I could join as a panelist. You can join. We'll have you on sometime. When would you like to join? If you're a channel member, you could technically join. Actually, wait, I think that's class. I have no clue. We're just kind of wrapping up right now. I don't know if we're having anybody else on, but if you want to, contact us via Twitter or Discord, and we will gladly have you on sometime. And just, he is a channel member. He was actually a Class A channel member, the highest tier. Unprompted, and we said thank you in the chat.
Yes. So yeah, we would definitely like to have you on if you still wish to on a future episode.
Yeah. Thank you once again to all of our channel members and Muhammad last week for giving us like a $50 donation. I
think that's the biggest super chat we've ever had, or is that not correct?
I think it is.
Yeah, we should have like a leaderboard of like the highest super chats.
Yeah, like an all-time leaderboard. I think it would be Hugo at like number 2 with like a $10. Maybe Gil and what's his name put a $5 in. Echoes did a $5 once.
Oh, that's true. Yeah, we've had a few random super chats for random amounts, but that one definitely stood out last week. The holiday.
We'll make it. Oh, so next, do we want to wait till next Saturday to do the end of the year quarter year short, or do we want to do a New Year's Eve episode and skip Saturday?
Interesting.
We could do a little community vote in the Quote of the year, though, is pretty good this year. I will warn you. We're going to see more on it.
Yeah, I could go either way on that one.
Okay. Alan asks, what is the value of paying $20 a month for the membership? Usually, a lot of people will choose the $5 one if they want to be generous, but the $20 one, honestly, it's just to support. Being a private equity investor, there's not much like added benefit. I'm sure, if you could, if you want us to make a video on something, we could.
Yeah, I mean, I'd be open to I suppose ideas, especially if that membership level got a little more built out, doing more special things for that tier for sure.
Yeah,
but at the moment, it's just the OGs who really want to support who do that tier.
An investor indicates they'll make a positive return. Okay. All right. We want to thank you all for tuning in. Fiscal, how was your Christmas? What trouble did you get into this week?
Just really went off diet.
I'm with you.
Yeah, ate a lot of pizza, and a lot of cookies and things like that. Yeah.
Speechless, I see. Yeah, I'm with you. I was very heavy last night.
Yeah.
It's all water weight. It's all water weight and salt. Just
a lot of it is water weight. Yeah.
Yeah. So.
But I think I'll get some crazy pumps when I get back in the gym.
Oh yeah, absolutely.
From all the glycogen stores being full. So
yeah, 100%.
Yeah.
The number of people watching could fit in my shower. Hey, we have 40 people, including on Twitter. Yeah, once again, smash the like button. I think we've had like 6 likes, but that's okay. We'll say it's 2 to try and get more sympathy, but smash the like button if you haven't already. It helps a lot. That's pretty much it for the episode. Thank you all for tuning in. I'll update when we do our show. Plan for next Saturday, but if the people want an end of the year show, we'll do it.
Too late.
Smash the like button, subscribe, do dividend, stocks, hard drugs, and of course, cash flow is king. Oh yeah.